This is Alan Bush with the Daily Financial Forecast for Tuesday, March 1st. Starting out with the stock index futures, first of all, I must tell you that being on the floor just about 20 minutes ago, a lot of the traders are talking about the possibility of some breakouts to the upside. And I would have to agree that the charts are looking a bit more friendly now. Also, stock indices overall performing better than the news over the last couple of weeks, I would say. In the overnight trade, we did see some strength in the indices. This due to a more calm international financial situation. Also, we did have crude oil prices that were higher. Since then, though, the crude market has weakened, but 3 better than expected U.S. economic reports took over to take stock index futures to new highs for the day. So longer term, we do believe that the indices are likely to continue to advance, and not just from a technical point of view, but from a fundamental point of view as well, with the interest rate market environment still very supportive to the long-term outlook for stock indices. Now, moving over to the currencies, the dollar index came in basically steady, but very quickly advanced with those 3 economic reports a bit earlier today, all coming in better than expected, and those were U.S. reports. So we do believe that the dollar index is likely to advance as interest rate differentials continue to remain favorable for the dollar index. Also, we are seeing a little pressure in the euro currency, even though we did see some better than expected employment numbers in the Eurozone and also in Germany. In the pound higher, even though it was just last week that the British pound traded at its lowest level since March of 2009. But gains in the pound today, even though we did have some negative economic reports from the UK. And in the Japanese yen, some pressure developing as flight to quality longs are being liquidated. And the Australian dollar firming up a little bit. We did have the Reserve Bank of Australia holding its policy meeting today, and they kept rates unchanged as expected. So I'd have to say the main thing to look at in the currencies is being long the dollar, as fundamentals remain very bearish there. And also in the pound, I would think that the pound would have a very difficult time advancing with the referendum to leave the European Union scheduled for June 23rd. That's a very big negative for the pound. So looking for higher in the dollar, lower in the British pound. Now moving over to the interest rate futures markets, we did see steady prices early, but as the reports from the U.S. came in a bit earlier, all bullish, at least bullish for the economy, which is bearish for the interest rate markets. Some pressure developing in the bonds. Longer term, though, I think that we will see a trend toward higher prices at the long end of the curve, especially with global interest rates likely to stay low. Also, one more thing of importance, the financial futures markets are now predicting that the Fed will raise rates at the December meeting. There is now a 51% chance of a rate increase at the December meeting. But in any event, the long-term trend on the bonds still appears to be higher in spite of prospects of a tighter Fed later this year. So once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland. And good trading, everyone.